Good morning, almost good afternoon. I'm Baggard at Stock Market Caddy, and today is Saturday, September 14th at about 11:30. First, my apologies for not being able to do a midday YouTube session on Friday. We were just absolutely slammed, just very, very busy. We will try to do as best we can a midday view, but it's going to be really busy this month. The trading is tremendous, and also we have a lot of folks rolling into their Q schools at various stages. If you want to know more about who we are not, and about our Q schools, be sure to visit stockmarketcaddy.com. Now, if you want to get an idea as to what's going on in the markets, it can be as easy as this. And what is this? This is SMC for Stock Market Caddy, the swing machine. And let me just size this up. Now, of course, if you want to turn on CNBC or even Fox, Neil Cavuto, he's a piece of work, isn't he? Or CNBC and any of that stuff, you can have at it. But let me show you something here. We're going to put in a label row, Now, this tool does not use moving averages, stochastics, or MACDs. There might be a place for some of that stuff, but not in much of what we do. So we're going to put in, let's say, the S and P. We'll do a few of these. This is how fast, and you can have this all preloaded, and this tool could, and it is a decision-making trading tool, could be on your desktop. So we're just going to use the continuous symbol for the futures at ES. And the futures are just that. They're forecasting the future. So even if you don't trade futures, you can get maybe a 1 day, 2 day jump on the ETFs. So we look at the daily view of the ES, and it went long 3 days ago. It's delivered a very small percentage increase from the entry to the last trade, but because it's leveraged, $3,425. The trend is solidly up. It's getting a little bit long in the tooth, but it could certainly run higher. And yes, we do know all about the Fed and yada yada. When it comes to that sort of thing, you can know that something's going to happen. You might even know that he's going to cut 50 basis points or 25. You actually may even know. But what you don't know is the market reaction. We're going to put in here the NASDAQ, by the way, while I'm chatting with you. And so you never do know. But that's why we track money flow. We can track it on a daily basis, intraday. And let's put in the NASDAQ, symbol NQ, futures contract. Now, this is interesting. You say, oh, well, there you go. He's got a big loser. It is a big loser. NASDAQ's been pretty violent. So Swing Machine doesn't get every single trade right. It doesn't. It is a management tool, a trading tool. But let me show you something. Let's say that 9 days ago, you went short, which is what it is. It's positioned short. It's ripping against the short. And here you would be down on a leverage trade, $10,475. And the difference between getting short here and where it is now is minus 1.35, but it's so much money because it's leveraged. But this is where you could use some trading education. Option traders know this now. Many times they're placing spreads where they are both long and short the same product, the same market. Why do they do that? They do it to reduce their costs and to reduce volatility. So let's say that you went in, maybe you used a futures contract. Maybe you used an option and you would be down handsomely. But what if you had hedged your bet using Swing Machine, which is what you can do so easily? I'm going to go to the same market, and I'm going to get inside the day. Now, I'm not going to go with 1 minute, 3 minute, or 5. I'm going to go with an hour. Well, what do you know? So if you had this tool on your desktop and you were managing the trade and you begin to see it go against you, or maybe you're watching on the 60 minute, because you would see it, you're inside the day. That's why you don't want to use all your capital on just one trade. You want to have enough capital so that you can maneuver and you can do this sort of thing. You could hedge. Had you gone long 78 hours ago, you'd actually be up 14,895. So you'd actually be net up, net positive, almost $5,000. But Don, how can I be possibly long and short the same market? Well, in the futures, you can trade them opposite each other. You could do that sort of thing. One would negate the other. However, you could use micros, M and Q. They're 1/10 the size. So to get perfectly hedged, you could have used 10 micros. Thereby, you could be both short and long and hedge yourself. So you wouldn't be down a full 10,000, you'd actually be net positive 5. When the hourly gives up the ghost and wants to go short, maybe you take the hedge off and then your core position gets into the money. That sort of thing. That is the sort of thing that we like to share and teach during our Q schools. But let's put in the Russell 2000. We'll keep going here. We got a few minutes. We don't want to run past 10 minutes. And let's put in at RTY. On a daily basis, same thing. The Russell got caught short. Let's put the Russell, and it can happen to the best of them, including Swing Machine. But let's take a look at the hourly. Once again, come into the hourly, hedge your bet. There you go. You'd be hedged a little bit. And let's do, well, sure. Let's do the Dow label row. Let's add it again here. I think I did. Label row. There it is. And then we'll put in the Dow, not the down, the Dow. And at YM daily. And 21 days ago, and the Dow is rather stodgy, probably no need to hedge it. You're up $3,000. Now, how about gold? Everybody's talking about gold. Even CNBC is now a little late, CNBC, but add a label row as an example, gold, and we'll probably stop here at GC. 52 days ago, had you gone long with a futures contract, you'd be up $19,000. And just for the sake of discussion, let's say that you wanted to trade it on an hourly basis. Be prepared to hedge it. You don't want to hedge. You don't want to double up your bet. You would only go in the opposite direction. But 41 hours ago, it actually went long too. So you wouldn't double it up. But if the hour went short, maybe you stay long and then short against it in an alternative micro market or options or that sort of thing. When you put on a trade, folks, you shouldn't feel as though you shouldn't be putting on, we don't put on a huge trade, our full account, and get our feet stuck in cement and get fully convicted into one direction or the other. We do what? We hedge our bets, much like a hedge fund. We reduce our costs, we reduce our exposure. We're not trying to get the very top. We're not trying to get the very bottom. We're playing for the middle, extracting cash flow. And we're doing it mechanically and what we call robot assisted. It is an acquired skill. And just like any other acquired skill, we have beautiful decision-making trading tools, much the same way that a carpenter has great tools, or a scuba diver, or a pilot. You want to have great trading tools, but you also want to have the personal instruction to how to use those tools. And that is what our Q School is all about. Go through it once, and then you can get access to everything that we have, now totaling close to 70 individual programs, proprietary programs, indicators, paint bars, show me studies, and full-blown trading robots or strategies. Have a great Saturday, and we hope you are getting it done. If you are, keep doing it. If you're not, stop, look, listen, and check us out. Thanks.